Hi there, Carl Baker again with Infinity Commercial Capital, continuing our mini education series or mini webinar or video on things that we encounter all the time. So just earlier today, somebody was asking me about qualifying for financing. Now, in that particular case, and I'm taking the chance that they might see this video. In that particular case, they were asking about a personal loan, which we're not able to help with, but he knew I was a lender, so he asked me some questions. And the overarching question still is quite germane, and we address it all the time. And that is how to qualify for a loan when you go to a bank and the bank asks for your tax return and you're a self-employed business owner, and so you're trying to minimize your tax return and also be comprehensive in putting all your expenses onto the tax return. Oftentimes your self-employed earnings are reflecting expenses that show that the business doesn't earn very much money. So according to your tax return, you're just not making very much money. And so a lender looks at that, and even though you might be applying for real estate, and again, separate subject for what this person was looking for, but let's apply that question to real estate. You might be applying for an investment property, but a bank lender is going to look at not only the viability of that real estate, but they're also going to look at the viability of your personal situation. It's a global credit review. So they will look not only at the debt service coverage ratio of the enterprise, the investment property, but they're also going to look at a global debt service coverage ratio with your entire portfolio and total earnings, as well as your debt to income ratio on a global basis, and determine yay or nay as to whether they believe your credit situation qualifies for a loan. So we actually tell certain lenders or certain borrowers in that case, hey, you might need to show some profitability on your tax returns in order to qualify at a bank if you really want to go the bank route. I tell people all the time that you can either pay no taxes and get no loan, or pay taxes, show earnings, which will help you qualify for financing. Now, the good news is that many of our real estate programs, not only do they do our loan structures offer 30-year fixed rate commercial loan, but your personal situation will not be included in the underwriting. So how many loans do you have? Doesn't matter. What's your global debt service coverage ratio? Doesn't matter. What's your debt to income ratio? Doesn't matter. What does your tax return show, whether it's W-2 or self-employment income earnings? Doesn't matter. We actually offer commercial loans based on the asset, the subject property, and that property's ability, wherewithal to fund the debt service. We look at the property's debt service cash flow ratio. As long as the rents from that property are sufficient to cover the debt with a small cushion, 10 to 20%, that's a 1.1 to 1.2 debt service coverage ratio. As long as that happens, we're not even going to ask for your tax return in most cases. So that's another little side bit, but all of that comes from people struggling with qualifying for loans because of their tax returns. So hope that helps, and stay in touch, and we'd be happy to help you. If you have any questions, reach out. Thanks a lot.